Investors, Wall Street and elsewhere, did not seem very thrilled with the message as we bring in Doug Flynn from Flynn Capital Management. I will say that the stock market is well off the lows, might even close up a tick or two, but the oil market has been the story. Let me go to our tablet and just project up on the screen the West Texas Intermediate, which is our benchmark, WTI, and Brent crude. Now, what's notable today, I think it's the first time in 4 years, Doug, that WTI, which is like the American benchmark, is higher than the global benchmark. So let's start with that and maybe explain what's going on. I think it's something to do with, because these are futures contracts, right? And when the oil is going to be delivered.
That's right. And so what happens with the WTI, which is the American version, is those are delivered about a month sooner than the Brent one is. So what happens is when you have a global supply shortage, which is what you have going on, people are willing to pay more for something that's going to be able to be delivered sooner. And so those future contracts are being priced up because they want the oil and they want it sooner. They don't want to wait. So that's what's happening. And that's called backwardation in our world. But that's the official term in futures of what's going on right now with that pricing.
That's because Brent went to the next contract, right? Is that Brent went to like the June contract, whereas WTI is on May? That's
exactly right. So because it's sooner, you can get it sooner for the delivery, and they want that delivery, so it's priced up because they need it sooner.
All right, both up though. So let's talk about the direction now. So there's a big gain in the American oil, the WTI.
Right.
So that was like 11% today. So what was the takeaway from the president last night? I mentioned the guys a few minutes ago, and we watch everything he says, and we're covering it every day. I didn't hear a ton that was new, but it seemed like markets for a while were just focused on the, bomb them back to the Stone Ages type of thing, and this could last a while. I don't know.
Yes, I mean, we went from yesterday and the day before of where we were looking for a sooner ending and a quicker end and opening to the Strait to this morning we woke up and it went the complete opposite. They're thinking now it's back to a longer term situation and maybe not a quick opening of the Strait. And so that's, the market went down quite a bit on that idea. And then you have that same thing that's been going on for a long time, which is oil going up and stocks going down, or reverse every day. And so it's getting blurred a little bit, but that was the big difference, is maybe the anticipation of it was getting better yesterday. Even if it's not getting worse, it's not as good as it was yesterday. So it's just selling off on that news.
Okay. And the other thing that's interesting kind of goes back to what you and I were talking about with the differences between the types of oil in these contracts, is that the president keeps making this argument that we don't need it. We don't need the Strait of Hormuz. We don't need Middle Eastern oil. Here's part of what he said last night.
We're in great shape for the future. The United States imports almost no oil through the Hormuz Strait. The Strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing, and the gas prices will rapidly come back down. Stock prices will rapidly go back up.
Okay, so the first thing we know, because you just told us a few minutes ago, is that we're still affected by the price for these supply and demand reasons and when you can get the oil and everything else, and our price is up. But what about that last part, this argument that, it'll rapidly come back down and the stock market will rapidly go back up?
Well, what he's referring to, first off, is that the U.S. Imports only about 2.5% of the oil that it uses. And the argument there is we're only doing that to give money to some of these foreign countries. We actually don't even need it. But so it is a very small percent of what we actually use. But it is a globally priced commodity. And so it's going to have an impact on American drivers. And the impact, because crude, the price of crude is about 50% of the ultimate variance in the gas price locally, because that's how it factors in. And so when it goes up a lot. And when it comes down, as we've talked about, it takes about 4 times as long for the price to go down. So it will come down when we get some normal pricing back, whenever this gets behind us, and the sooner the better, as we've talked about. But it's not going to be, like a rock, which is what he said.
So do you think the $4 gas, like we'll pop that up here, the national average for gas prices and the current average, which is right here, $4.08, okay?
Yeah.
So it was up from under $4 a week ago and $3 a month ago. So it's up $1. Okay. So you're saying it stays around or hovers around $4 for quite a while, or?
It's going to, if you keep looking at the price of oil, and oil's up big today, that's going to keep creeping in. There's a little bit of a delay. Even on the way up, there's a little bit of a delay. So as long as it stays up here or even goes higher with what's going on, that price is absolutely going to stay there and possibly get higher. Whether or not we'll get back to the $5 or more point that we were 4 years ago.
Yeah.
Anything is possible. But yes, eventually, if this does get solved and it gets open and the price drops, the price will come back down. It's definite. It's not an immediate reaction, but it does go up fast and it does go down. But prices stay around here. That price is not dropping. There has to be a cause and effect, and the cause is the price that we're dealing with right now, and it's a global price. Even if we don't need any oil, it doesn't matter. It's still the price is the global price of oil because everyone else wants to buy our oil, and that's going to keep our price up.
Yep, that's supply demand, how it works. Doug, thank you as always. Doug Flynn.